Trailing stops. If this is your first time joining us, welcome to Manward in the Field. I'm Alex.
I'm Andy.
You may have arrived on this video from one of our other videos on investing. We've done sort of a how-to series on stocks and how to do things like a pro. So this is a video that has been requested by folks quite a bit. We've mentioned trailing stops before. Today we're going to get into the mechanics of how they work and how they can help you determine when to sell and automate that process.
Yeah, we came out of our field. Normally we're stuck in the field in our nice little orange chairs, but we came out of it today to show you something important. So trailing stops are probably the most important tool a trader could have in his toolbox. Follow the techniques we're showing today. You can do it in any brokerage. We'll show you TD Ameritrade, Etrade, Robinhood. If you can master any of those three, you can do them all.
Yeah, and it's actually really good that you bring that up because we recently had a video that we did on the best brokerage to use. So if you're interested in seeing our thoughts on what the best brokerages are for people of any level, go ahead and check that out. We'll put the link for it right here. Is this right? Is it here? 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 All right, so let's get started. So we can log into one of my accounts first. Let's go ahead and check out Etrade. So it's a pretty popular brokerage. Most people are familiar with them. They've had some fun commercials in the Super Bowl. If you look at my screen, as you can see, here's my portfolio. Why we're going into my existing portfolio is because you can't put a trailing stop on a stock that you don't already own, which should make sense. So let's say that I'm concerned or want to set a stop on Apple, which my position there is doing quite well. Thanks. So what I'm going to do is I'm going to go as if I'm doing a sell. I'm going to go ahead and click into that position. And it takes me to this screen here where I'm going to do my order. All right. So for this, I'm going to go down to price type. Because I'm doing a sell and I've specified I'm doing a sell, going into price type is going to break down my options for whether I want to sell right now. So sell at market at the end of the day. So market on close, set a limit, etc. But what we're doing is a trailing stop. So there's two types of trailing stops you can do. You can do trailing stop percentage or a trailing stop dollar amount. Dollar amount is if I have a specific figure at which I want to sell my stock. So if it drops down to a certain price, I want to trigger a sell. Or percentage. So Andy and I tend to stick to a percentage trailing stop. It kind of keeps things easy, allows you to hold on to your gains as the stock is going up. So I can basically say, as the stock's going up, let's just say 25% is my trailing stop. If it slips backward, the most I will lose is 25% from where the stock is at that moment. So just select trailing stop, enter in 25 right here for the stop value, and then I'll say when I want this, how long I want this stop to be good for. So you have a couple options here. In Etrade, you have good for the day, and you have good for 60 days, and then you have good until a certain date. So for me, let's just say I don't want to have to look at this again until, the end of the year. I'll reevaluate at the end of the year what I want to do with this position. So I can select that. So I'm going to click save and we're done. That was Etrade. But as you're going to see, it's a similar exchange on pretty much any brokerage. In fact, do you want to pull up one of yours?
All right, so I'll show you how to do it on TD Ameritrade here quick. So this is just a kind of dummy account you'll see up here.
Don't sell yourself short, Andy.
Sorry, it's what I do. You'll see up here it says Manward, and we have a whopping penny in there because that's what I had to do just to create a fake account. So we won't actually be able to make the trade, but as you'll see through the screen here, it's very similar to what Alex showed you with Etrade. So we'll go in. This is where all the action happens. We want to sell a particular stock. Again, a stock that's in our portfolio. We'll just do we'll do 100 shares, and we'll keep it simple and do Ford because that's my my go-to when I'm doing a sample. Alex knows that.
You do love Ford.
And here we have all the different order types. We have trailing stop, stop limits, that sort of thing. You can see trailing stop percentage is selected. We go in here and hit 25%. Time in force, so we want this to be good until I cancel it, which means I got to come back in and actually turn this off. That's what that GTC means, good till canceled. And then we just hit review order, And that is it for TD Ameritrade.
That's interesting. We should note the difference there. So in TD Ameritrade, they gave you two options for when your trailing stop was going to expire, whereas you had some more versatility with Etrade. I don't know if it's a good or a bad thing. I would have actually liked a good till canceled option on there, so I don't have to check back at any point.
But it's good to check back every once in a while too, or you might forget it. All right, so let's go into Robinhood. That's kind of a similar setup here. You can see on my screen here the stocks I own. Again, this is just a dummy account. But let's go ahead and sell our shares, or put a stop loss in on our shares of Great Lakes Dredge and Dock. You can see I bought in at $4.95. It's up to $10.87 now, so we more than doubled our money. So we'll go ahead and sell that. So you can see the different price action here. We have a shot of just this stock up here in the upper right hand corner. We hit the sell button. We have one share, so we'll put in one share. You can see the various prices. Then we have to go to this guy and change our order type, and so we just go to trailing stop order. Very simple. Again, we have percentage or the amount. We're going to do percentage to keep things simple. 25%, do one price. Again, good for the day, good till canceled. That's that GTC. And then you can see here how much we'll sell it for. And then we just hit review order, and it would go through from that. So it's very, very simple. No matter what brokerage account you're using, it's all very similar. So we encourage you to check out this form of selling. Don't try to do willy-nilly selling. My rule is always know when you're going to sell, when you buy the stock. And the easiest answer to that question is by setting a stop percentage in your head before you make that trade. So I normally go with a 25% trailing stop.
If you wanted to change it up, like because I've seen situations where you've recommended kind of a tighter stop, so what are some reasons why people might not want to stick to that 25?
Sure. So it really comes down to volatility. You're going to have a good understanding of some of the metrics around the individual stock. But a stock like Ford or something, or a larger company, if it's moving 25% below its high, something fundamentally has changed.
Sure.
But if you're looking at a wildcat gold miner or something where a 50% price swing might be normal, you can look at the standard deviations and do the math. So the more volatile it is, the bigger the stop loss. You might want to go 35, 45. But a bigger company like Apple, or something that you don't expect to move more than 10%, out of normal noise or something, you might want to go with a 15% trailing stop. The point is to protect yourself from the normal day-to-day noise and get yourself out of a position if something fundamentally breaks. If the big numbers change, it'll kick you out of that stock before it falls even further. It's for when that sea change comes, the tide's changing. That's when you want to get out, and that's what the trailing stop's designed to protect you from.
So there you have it. I hope you found this video useful. Trailing stops, we'll constantly try and make the case for them. They're a great tool for any investor, and they can actually save you a lot of money, maybe even make you a lot of money.
Yeah, I mean, historically they've been showing, the math is out there, the research is out there that shows that by using and sticking with a trailing stop strategy, you can boost the average portfolio by something like 300% or more. So they absolutely can save you and make you a lot of money.
300%. I'll cheers to that.
Cheers to that. That's what we got.
Hey, I hope you enjoyed today's video. If so, please like, comment, subscribe, share it with a friend, all that good stuff. And if you want to learn more about trading or hear more from Manward, I encourage you to sign up for our free daily digest. There's a link in the description below.